Imagine a world where the numbers in your bank account, the money that dictates every decision in your life, the very currency that seems tangible and solid, is actually built on promises, ledgers, and invisible digital entries that no one outside a few financial institutions truly understands. Picture logging in tomorrow to see your account balance rise without a single deposit, no paycheck transfer, no government distribution, just more money appearing as if by magic. And yet, this is exactly what happens every day in economies around the globe, from London to New York, Tokyo to Dubai. And yet, most people, even highly educated individuals, have no idea how it works because they were taught in school that money is physical, that it exists in vaults or cash registers, when in reality, modern money is created first as an idea, a promise, a number in a digital ledger before it ever materializes as paper, coins, or even digital currency in the common sense. And this hidden process is not a small technicality. It is the backbone of global finance, the engine that powers nations, markets, and the everyday lives of billions. Yet it operates in near total invisibility, controlled by a combination of central banks, commercial banks, governments, and institutional investors, each step seemingly benign, but cumulatively shifting enormous amounts of power, wealth, and influence without anyone voting or even fully noticing. Consider governments needing money for infrastructure, defense, healthcare, and salaries, but finding that taxation alone cannot cover the necessary expenditures, so they turn to borrowing, selling bonds, and taking loans from commercial banks and investors, promising to pay back the principal with interest over years or decades. And here lies the twist most people never understand. Banks do not lend pre-existing money. They create new money digitally the moment a loan is approved, adding new entries to accounts, which instantly becomes real money circulating in the economy, enabling businesses to hire, governments to spend, and markets to function. And yet this process means that every pound, every dollar, every euro starts life as a promise to repay with interest, a promise that mathematically requires more money than exists in the system to satisfy all obligations, ensuring that someone, somewhere, will inevitably lose or default. Meanwhile, public perception and mainstream narratives insist that borrowing fuels growth, that loans are the lifeblood of prosperity, while the reality for everyday citizens is often drastically different. Wages stagnate, inflation quietly erodes savings, household debt rises, and yet GDP numbers continue to climb. Stock markets celebrate new highs, and governments declare that the economy is strong, creating a surreal contrast between statistical growth and lived financial experience. And on a global scale, this invisible money creation extends further as nations borrow from foreign investors and multinational institutions like the IMF or World Bank step in, not always to help, but to impose conditions that ensure debt repayment, fiscal discipline, and economic policies favorable to creditors, shifting decision-making power from local governments to distant financial authorities and reinforcing a quiet but immense transfer of wealth and control from the many to the few. Consider how the cycle repeats. New money is created through loans, fueling spending, production, and consumption, but the total interest owed grows faster than the base money supply, meaning debts must be refinanced, rolled over, or defaulted upon, keeping the system perpetually dependent on trust, confidence, and continuous credit expansion, a fragile web where a single shock or breakdown of trust can cascade into global financial crises, as seen in the 2008 collapse.
The Eurozone debt crisis, or emerging market defaults. And yet most people live their lives assuming money is tangible and stable, unaware that it is instead a delicate balance of promises and accounting, and that the financial world operates largely in shadows, on ledgers, with decisions and power structures invisible to the average citizen, influencing everything from inflation and interest rates to housing markets, employment, government policy, and even social mobility. Imagine then the personal impact. Every pound in your account, every mortgage, every student loan, every government bond that seems distant and abstract depends on a chain of trust, stretching from your bank to central banks, to investors across continents, and ultimately to millions of strangers whose faith in the system sustains your ability to pay, spend, and live as you do. Break that trust, and the system falters, not because the money physically disappears, but because the promises underpinning it collapse, triggering ripple effects through economies, markets, and societies, potentially wiping out savings, destabilizing currencies, and forcing governments and institutions to intervene, often at the expense of ordinary citizens, while those who issued and profited from the original creation of money often remain secure. The irony is stark. The more complex and global the system becomes, the more opaque it is, and the less the average person can truly understand where their money comes from, why it moves, and who ultimately benefits. Yet the stakes are immense, because this invisible process determines wealth distribution, power dynamics, and opportunities on a scale so vast that even subtle changes can have consequences felt decades later, shaping who has influence in policy, who can invest, who can accumulate wealth, and who remains trapped in cycles of debt. And all of this, the creation, circulation, and invisible control of money, happens quietly, every day, unobserved, largely unquestioned, dictating not just economic outcomes, but the political and social structures of the world, while people go about their lives, thinking they understand money, when in fact it is a system designed to move faster than comprehension, to leverage trust, and to maintain an equilibrium that favors continuity and control, meaning that understanding this hidden mechanism is no longer optional for anyone who wants to navigate or even survive in the modern global economy, because every financial decision you make, from spending and saving to investing and borrowing, is influenced by forces operating far beyond the visible, forces that control the flow of digital money, the creation of credit, the distribution of debt, and ultimately the fate of nations. And the question that remains is not just how money is created today, but what happens when the underlying trust, the invisible agreement that binds it all together, begins to fracture, because in that moment, the entire system, built on promises, ledgers, and faith, may become something unrecognizable, fragile, and profoundly consequential for everyone, everywhere. If you want the next video, please tell us in the comments which topic you want us to cover from our upcoming series, The Secret Mechanics of Global Banking, How Debt Shapes the Fate of Nations. Share your thoughts and let us know which topic excites you the most. And don't forget to subscribe to our channel to stay updated on the latest deep dives into the hidden world of money and finance.